Yes, we did. We did. That's another way to think about it. We did. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial Turmoil Explained.
Good morning, ladies and gentlemen, and welcome to the show on this September the 22nd, 2022, a Thursday. Thank you for tuning in. Glad to have you guys here. Now, I'm going to tell you, I'm looking at the Dow Jones right now, 30,126 this morning. I'm going to tell you what, and the S&P 500, all the markets, Russell, all of them, NASDAQ, all of them. I feel very confident right now at this point that unless something major announcement comes from the Fed or whatever about that they're going to stop these crazy policies of raising interest rates and quantitative tightening, I feel very confident that this market's going to roll over big, and that we're on the precipice of it. So my call for October is not only still on, I'm starting to feel very confident that my call is correct on the October problem in the market. Well, you say, well, how deep into the market go? Well, let's take a look at this article by the Fed. U.S. Federal Reserve attacks inflation with another big hike, and they expect more. Washington. Intensifying its fight against high inflation, the Federal Reserve raised its key interest rate on Wednesday by a substantial 0.75 of a point for a third straight time and signaled more large rate hikes to come, an aggressive pace that will heighten the risk of an eventual recession. The Fed's move boosted its benchmark short-term rate, which affects many consumers and business loans, to a range of 3% to 3.25%, the highest level since 2008. Officials also forecast they will even further raise their benchmark rate to roughly 4.4% by year's end, a full point higher than they had envisioned as recently as June. And they expect to raise the rate next year too to about 4.6%. That would be the highest level since 2007. Does that ring a bell? 2007, 2008? I'm going to tell you guys, I really do have a high level of confidence that next month this market is going to turn, and it's poised, it's perched. Let's go back to the Dow and take a look at it. Can you see it's just perched? Now we may have another little tiny bounce upwards here to make a shoulders pattern. Overall, I can see it going down here into the 25,000 range very easily, 25, 26,000 range. At what point will the Fed start to squeak? It's like, you ever seen these bathtub toys, little ducky, Well, a big foot, they don't realize it, but a big foot is standing right above the ducky toy, okay? And it's a big 400-pound guy, and he's ready to put his weight down on that ducky toy. And at what point is it going to squeak? And that's the Fed. These markets and everything, and the whole entire world economy is like that big 400-pound sumo wrestler who's ready to put his foot down on top of the ducky toy, which is the Fed. And they're going to squeak. And by squeak, what I mean is go back to a more accommodative monetary policy. This is called a Fed pivot. And this is what I'm expecting. But first, they're going to make the mistake of destroying the economy and removing the wealth effect and bursting the real estate market and everything else. They're going to create a tremendous crisis by doing what they're doing. And I've been saying this all along. They had a reasonably functioning economy. How come everybody's destroying everything right now? It's like they're all out there. All of our world leaders that we've elected, they're tearing the world to pieces right in front of us. It's like they're insane. Now, all of us out here, the people, we're still sane, but they are going on this destructive tear, this destructive pattern that is making it bad for all of us. First off, we're getting so we don't, people are getting so they don't feel secure. And this isn't right of them. This isn't a good thing. This is a very bad thing that they're doing. And these world leaders, they basically don't listen. They just do what they want to do, and they're hell-bent on destruction at this point and bringing about a system collapse. They squabble over nothing, practically. I don't know what the solution for this is, but honestly, guys, we are in a lot of trouble right now in the world. It's coming at us from a number of different angles. I guess it's part of the end of a cycle, the fourth turning, or whatever you want to call it. But I'm very concerned about the things that are going on right now in the world. The problems, and you guys know the problems, But I'm going to kind of stick to the financial problem this morning. But there's two major problems in the world right now. And one of them is the financial problem. Look, we've already, now the market's changed. We're 99 points down on the day so far. We're almost ready to bust down below 30,000 on the Dow. But, it's got a long way it can fall. And where will the Fed react? I've been predicting 25, 26,000. But maybe not. Maybe they'll let it go down below 20,000 before they'll react on the Dow. But 20,000 is the point that I've told you guys that we're going to have a credit freeze. If you remove that much liquidity from the system, you're going to start to have certain entities within that system. I don't know, it might be, I don't know who it is right now, but it's going to be basically Lehman. You know what happened with Lehman Brothers. It's going to be something similar to that. I just don't know what entity out there is ready to go under. But when you start removing that much liquidity, all of a sudden you get issues in the system, and it can spread, because once that first person goes down, they might be connected to 4 or 5 other people, and they go down. It's like a bunch of cards toppling. The house of cards coming down. And I told you, if 20,000 is my mark, I'm putting on that. And so, just how far is the Fed willing to let this go? Because I've told you guys which direction this is going all along, and you can see the fall. We're in it. We're in the collapse right now. This is if you look at this chart here, look how quick that is falling off. This is falling. This is a falling. And for you guys out there, you think, oh, I'm going to buy into the market, because buy when the market is. Don't catch this falling knife. That's what I'd say to you. Don't catch this. It's going to fall. It's going to fall a lot further before they get ready to turn. I was predicting 25, 26,000, but now I'm thinking it might even go lower. Okay, so now for you guys who can predict the bottom, and you do hit the bottom, and I don't think we're there right now, but if you guys can hit it, maybe you'll see the same thing happen that happened here when it was free falling and then the Fed stepped in. But they're nowhere near close to stepping in right now. You can buy just before they step in, but don't catch a falling knife. Anyway, what I'm saying here is, Anyway, let's take a look at the silver price today. It's down 6 cents at $19.50. Gold, $16.71. It's down $2. Now crypto, we're looking at the crypto price at 18,932 and 1,271 for Ethereum. It's the same thing with the markets, with the cryptos. I look at crypto investing and investing in equities as very similar in some respects, as far as risk is concerned right now. Possibly the least risk thing out there is physical silver. It's got the least risk on it right now, if you wanted to get out of the dollar. But now, if you want to invest in the dollar, take into consideration that after the Fed pivots this time, the dollar is really going to take a devaluation big time. And at the same time, even though the DXY is going up, what you can purchase with them dollars is losing value. And, you know, if you guys are waiting for a bargain coming along where you can invest your dollars and make a lot of profit because the system's going to crack up and there's going to be margin calls and everything else, don't count on that happening. The Fed could pivot. They've told you they're data dependent. This could all be a big show, and the Fed could pivot without notice. Just boom. It could happen. And I mean, I might be wrong because this is their choice, so I might be wrong about them. This is their choice when they pivot. And so I'm just pivot prediction. My pivot prediction is I'm thinking that, you know, the market's going to roll over a lot, but they could just be bluffing everybody and making it seem like they're ready hot on to fight inflation and they're going to keep going forever raising these rates, and then all of a sudden just pivot out of the blue because it's their choice. They can do it whenever they please. Never forget that. Take a look at oil today. It's up $2.75 at 85.69. Now the MOVE index, we're looking at the MOVE index has been staying relatively calm lately, in around 130. It's 130.54 today. Bonds and rates. Now this is getting out of control. This is seriously getting out of control. And this is a strong indicator that the system is starting to crack up right now, that we're in for a big market crash. This is a strong indicator right here. Look at the US 10-year at 3.7. It's up almost 20 basis points today. This is huge. When the debt market starts to show these signs of volatility, and basically this is huge within the financial system. And we're seeing huge inversions too, all over this. This is just flashing red lights right now. Warning, warning, Will Robinson. Warning, warning. This is it right here. Okay. What can I say except I think this is warning of a impending crash. U.S. dollar index today, 111.42, and this is warning too. And this is one of the things I told you guys about, and I'll repeat it, that this is probably a strong indicator for the Fed of when to stop and when to pivot. They can't allow this dollar to get too strong. I shouldn't say, see, this is one of the things, I shouldn't say that they can't. It's just, I should say it's unlikely. Because they can do anything. They could crush the economy if they want to. They got complete control over everything now. They got control over their Ponzi scheme that they started way back when. So, I mean, they could utterly destroy the world. Because money is what runs the world. And it almost seems like they're hell-bent on doing just that. Insanity is running rampant in the world right now, and we're not on a level footing. It just feels like ever since we entered into 2020, it just feels like the ground is shaking under our feet. It's just we move from one thing to another. And right now the big headlines and making people nervous is the war in Ukraine, you know. But as soon as that headline goes down a little bit, then the market crash will be the big headline. And it's like we're just sitting there waiting for the next shoe to drop because we've been through so much since the start of 2020. Anyway, listen, guys, thank you for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.